Welcome, guys. Welcome to today's live stream. We have already entered a trade and we're waiting to see if we're able to get to our profit target down here at our liquidity D zone. Price is kind of flip-flopping around a little bit. We're just waiting patiently to see if we are able to get to that profit target. It does look like some sort of volume is coming in. Let's see if this is just a correction for more downside. So we're just going to wait patiently, see if we get to that profit target. Price is kind of looking right now like it wants to reverse to the upside. Kind of broke down from this move. So is this going to be a bigger correction for more downside, or is this going to be a reversal? Let's see. We did bounce off this C zone, and this is quite a lot of momentum, well, volatility coming in on that 1 minute bar. So if this momentum continues, we could be reversing. Not liking this bar at all. This is starting to look like this could be, it's 1, 2, 3, and this is the last wave down, and it could start to go back to the upside. Let's see what it looks like here. 1, 2. Kind of a weird move to the downside. This one should be going back to the downside. Looking to get to this level. Price still trying to push to the upside. Just put my stop slightly above that A zone. So in the event it comes to that A zone and goes back to the downside, that A zone should offer some sort of resistance to push the price back down. If the price breaks through that A zone, it could be possible it may be reversing to the upside. And that reversal to the upside was not necessarily something that I was expecting right now. Taking the trade off this C zone, I was expecting price to get down to this D zone. Unless what we're getting here is 1, 2, 3, and we come down, we go back up, then we go down again. So this could be a correction by itself for one more down. We'll watch and see. So right now we're like 1-to-1 on this trade. It's a 1-to-1 risk reward approximately. Okay, so a lot of volatility just pushed in. And it's looking kind of dangerous right now. breaking through that downtrend. And it's coming up very aggressively. Are we going to blow through this A zone, or is this A zone going to hold, push the price back down? With this amount of momentum and volatility that I saw coming in here, it doesn't look very likely for this A zone to hold, but let's see what happens. Not looking good. So right now, guys, we're in a short trade. Price went aggressively against us. So now we're waiting to see if this liquidity A zone is going to hold, or if it's going to give us a signal that it's going to want to push the price higher, right? You can see that we have a very aggressive move to the upside. So it's very likely that price may indeed want to continue going up, unless price is building a bigger type correction. And this may just be the first wave in that correction, and price pushes the price back to the downside. Hit that subscribe button, guys. Hit that notification bell. Hit that like button as well. Help out the YouTube channel. We're at this area where we can see the price continue pushing up or go sideways before going up, or this is the area where price is going to come back to the downside, just reverse. It may not be a full-on straight reversal to the downside. It may be slow and choppy and just come all the way back down, right? And then maybe start moving a little bit faster to the downside at some point. We'll see how it plays out. But it's at a critical area. Remember, guys, anyone who stays with us till the end of our live stream, you will get a vacation package. I will send that to you in the form of a gift certificate or a voucher. All right, we're getting another red bar. Let's see if this is going to push the price back to the downside. Let's see if we can use trend lines to try to predict. Okay. So this is potentially the trend to the upside, right? So this line here, potentially the trend to the upside. This is where the down move broke to the upside, and that's why we had this burst of momentum and volatility coming in. There's another break of another downtrend here, and this is a top, right? So this here is a pattern for a sideways move, right? Meaning that this could be 1, this is 2, this is 3, and we go back to the downside. So that's a possibility as well. Look at it like this instead. Hopefully it's not too small for you guys. I was thinking that this was a complete correction by itself, but then if you look at this wave, it's just messy, like just very messy, right? So it could be this one and this one. They're connected as one wave, and price comes back down where you get a messy wave and a clean one. We'll see how it plays out. If price is coming down from this level, we may get a very deep fall. So that's something else that I need to prepare for as well. So this zone is no longer an active zone. That's going to have to be readjusted if price is going to come back to the downside. I'm just going to bring these lower. And if price breaks the low, then I'll just readjust. That's just going to help me gauge. Okay, so this potentially somewhere here where I'm going to target. Right. So that is all right. So far so good. Let's see if it continues coming down. All right, guys. So remember, hit that subscribe button, hit that notification bell, hit that like button, help out the YouTube channel. Everyone who stays with the live stream till the end will be getting a vacation package. At the end of the live stream, I will tell you guys how to get that vacation package. You will get it in the form of a voucher or a certificate. Price has reached a level where it could reverse to the downside, or if it goes sideways, breaks out, we could be moving to the next liquidity zone. Okay, so it looks like it's moving sideways and it may want to go to the next liquidity zone. Let's pay attention. Let's see what's going to happen next. This trade idea is surrounding the price moving down, not up. For those of you who are with me, thank you so much for watching the live stream. I do appreciate you watching my content. Actually, I do have 2 live streams. One where I trade my robot from 8:30 to 9 and from 9:30 to 10. And I do have this live stream as well where I trade manually using my liquidity map zones. And normally I start around 11:30 or so, and I go out maybe till the end of the day. So I have had this YouTube channel for quite a few years, but I've never really used it much. I've been busy, I've been working for a few companies and so on, so I never really gave it much attention. But right now I'd like to build my YouTube following and showcase the tools and software that I've developed over the years. So I hope that I'm able to bring value to you guys. So stick with me over the years, over the time, over the months, over the weeks. It's going to get better. Hopefully I'm going to get a few more guys in here so it can be a little bit more entertaining for you. I may not be the best entertainer. So right now we're in that phase where we're going through that punishment, right? That punishment where the price is just moving slowly and everyone's wondering, is it going to continue moving up? Is it going to go down? And some of us start to experience fear, and some of us may jump out of our trade, abandon. Some of us may add positions. I know this is a liquidity zone, and I know that it's going to be okay, liquidity area here, liquidity area here, right? So they took out that liquidity that was in the market at this zone, right? So if that was enough liquidity, they're going to bring the price back to the downside, okay? If they want to continue because there is a lot more liquidity above, they're going to push the price up. I'm thinking since we're in a downtrend, they're not looking to go back to the upside too much. So they're just maybe coming for these areas of liquidity here and push the price back down. And then later on, they come back and they take out all the rest. Okay, but we'll see how it behaves. If it goes sideways for a while, then it's possible they want to go up, take out the rest of the zones. Because if they're coming down, they're just going to come here, maybe go sideways for a while, and then they start pushing more aggressive to the downside. Okay, that means they want to come down. But if they want to go up, they're just going to just keep going sideways and then eventually break out to the upside. Right now, it's not looking very favorable for downside. Indeed, it's not looking very favorable for downside, but it's still very likely because of where we are right now in price. This aggressive move to the upside also doesn't make it seem very likely for downside. But we know how the market makers work. Sometimes they give you this aggressive move and then they just fizzle it out. Slowly just grind it down to nothing. Right? So we got to be careful with that as well. I know the price is moving to the downside, so I'm expecting it to continue coming down, not going up. This is where they normally suck buyers into the market. They give you this aggressive move and everyone becomes committed to buying. And when you become committed to buying, they just trickle the price down bit by bit by bit and just keep stopping everyone out along the way. Right? So we got to be careful with that. My liquidity zones, they work very well. However, you need to understand price action. When I started using my liquidity zones, I've made it for quite a while, but when I started trying to implement it, I just looked at it as just once price hits the zone, take the trade. I wanted to simplify trading as much as possible, but I realized that I would need to apply certain aspects of price action that I learned before, like corrective pattern formations. But instead of applying it in the way that I learned it with the Elliott wave theory, I would only apply that at my liquidity zones or just before my liquidity zones, right? So around this area, this area, this area, these are the best areas to apply the corrective pattern formations. Because if price comes here and it stops and it goes sideways and it breaks out, it's going to go here. Stops, sideways, breaks out, it's going to go to the next one, which is here, right? That's generally how it works. So you can see what happened here. It came down, it hit the C zone, and it continued coming down, right? So since it broke this, see this corrective formation here? It broke that corrective formation to the downside, so this is what made me sell. I'm looking for it to come here. So what they did was they brought the price back to the upside, right? So this was where they would have been grabbing liquidity, right? So they come back, grab liquidity before they go to the downside. Now, they could come back, grab liquidity here, go sideways and continue moving up, just reverse, right? But if we are to continue moving down and they come back, that's only telling us that there is a very, very high probability that if they're still looking to come down, they're going to come way further down than this level. So they're going to be probably coming down to maybe around this level down here if they're coming back to the downside. So now that gave me an opportunity to increase my profit target. So from $50 to $100, right? Because it all comes with an understanding of the price action and an understanding of the liquidity map and how it helps you to be able to predict what the market makers want to do ahead of time. So as we go on and you guys watch, you will see it will get better and better, and you guys will start to understand more and more. This is a very, very new way of approaching the market. Very new way. Never been done before. And it's been working. The price has been respecting these zones like clockwork. Doesn't really matter if I get the move right or wrong, but it's been respecting these zones like clockwork. Like you saw, price came from here straight into this zone, stopped. If it blew through this zone, it would stop here. Okay. So since it stopped at the A zone, I'm just going to watch. Is it going to go sideways before moving back to the upside, or is it going to just start trickling down, trickling down, trickling down until it breaks that low? Once it breaks this low, I'm good. I'm good for downside. I had my stop. It was a little bit in the zone, so I just put the stop above the zone because I know that if they violate the zone, then they're going to go to the next one and possibly the next and so on, make a bigger correction. Because I was also looking for that bigger type correction today, but I said it doesn't look like that bigger correction is going to come today. So it could be that bigger correction that we're getting now, or it could just be this pattern 1, 2, 3, and then they come back to the downside, and this is just a bearish formation for more downside. Sometimes we get that bearish formation where the price gives us this weak choppy type wave, and then they give us this middle wave, and then they give us this strong one, and then the price comes exactly back to the downside. So this is like inducing buyers, right? So they're going to watch. The market makers, they can see all the orders in the market. So they're going to just watch to see if there's a lot of buyers coming in. And if there's a lot of buyers coming in, this is not going to go up. This is going to go down, right? If there's a lot of sellers coming in, then this is going to go up. Okay? So it's sort of a manipulation. The market makers, they know exactly what you're looking for in the market. They can see your orders. We can't see theirs, but they can see ours. So the price is dancing around, just dancing around. Let's see how it plays out. Okay, looks like they want to push back to the upside. And they may be going to this B zone up here. So definitely I may be getting stopped out on this one. So what I'm going to do here, it took too long to enter this trade long, but this may be a long setup to this next zone. Not maybe, it is. All right, let me just take a look at this. Okay, we have this trend line here to the downside. So this zone could still hold and push the price back down, but we need to watch or it goes sideways and continues to the upside. All right, so I'm going to watch, see how it plays out. It's going to remove some of these lines. We're still going to look to see if this reverses somewhere around this level. But before I look to sell, I'm going to watch to see if this thing goes sideways to break out to go long. This was a nice place where I could have been going long. So let's see how this behaves. I'm going to look at it like this. I'm going to try to get the best view possible. Trying to get the best trend line drawn. If this is going to continue trending to the upside, it has to go sideways, maybe get to this trend line, then bounce off it to the upside. It could still break out of the trend line and then go to the upside. I'm going to watch this one closely. There's also the 200 MA here. As much as this is looking like a correction, I don't want to commit to these Elliott wave formations because it could let me down. the market makers manipulate these formations a lot. So I'm only paying attention to the Elliott wave corrective formations that happen at my zones. So just the ones that happen at my zones are the ones that I'm really looking to pay attention to, right? Now, the higher time frame wave is to the downside, but I am kind of expecting a corrective move to the upside, right? So if we get a bigger correction to the upside, it could come today, it could come another day. This could just be a correction for more downside, but I just need to pay attention to it to see how it plays out. I'm going to buy this one here, and I'm going to put my stop here. So this just gave me a better, another opportunity to take a better entry, because remember when this broke out, I was looking to go long, right? Though I should have been going long to this B zone, because it could hit the B zone and then come to the downside. But I'm feeling this thing wants to break out to the upside. And if it breaks out to the upside, it's very likely we're getting to this level. $34,151. All right, let's see how it plays out. This correction that happened at the A zone, this correction tells me that price potentially could be looking to move to the upside, make a bigger correction. It could get to the C zone and then just come back to the downside, or it could continue moving to the D zone. So I'm banking on the D zone, okay? If it breaks down from this trend line to the upside, then I'm going to cut my longs, and I'm going to look to resume shorts again. This should be the main trend line to the upside. So when price falls outside of that main trend line to the upside, it could be coming back to the downside, especially if it hits one of these zones before it breaks down that trend line. So we gave up like $50 on that short trade. So let's see if we're able to make it up by getting to this D zone above. All right, price is moving up nicely. One of the things I've learned is we can't really commit too much when we're using a lot of these retail trading strategies. Pratt, how are you doing, Pratt? It's been a while. I'm fine. I just noticed you in the chat. Pratt says, what percentage you have risk in this trade? I'm not actually using a fixed percentage of risk on my trade. I'm actually trying to go as heavy as possible on my trades, because I'm looking to try to turn this $100 into $1 million. And the only way to do that is to go hard, right? So it's going to be hit or miss. Okay, so don't try emulating what you see me do here. It's going to be hit or miss. Okay, I'm going extremely hard, extremely aggressive. So you can try to risk 1%. It's recommended that you don't risk more than 1 to 3% on every given trade that you take at any given time. Okay? 1 to 3%. That's what you should be risking. Remember, I'm not a financial advisor. Everything that you see here is for educational purposes only, okay? Also, Pratt, I am trading 2 accounts. One of my students gave me a challenge account that was in a very bad condition, and she'd like me to try to recover it for her. So I'm trying to recover that challenge account for this new student as well. So we'll see how everything goes. The day is moving a little bit slow. Normally, some more momentum could be expected to come back into the market around, let's say, 2 p.m. Eastern Standard, around that time. So what's happening right now is this B zone is looking to generate a correction, right? So this B zone is looking to generate a correction or a reversal. I'm thinking it's generating a correction. So if it generates a correction, it's going to push up again. And we're looking for it to break out of this downtrend line that you see drawn here. So if it pushes up, breaks out of that downtrend line that you see here, we could continue moving to this level, right? When we get to this level, we'll start looking for sells again. Okay? Okay, Pratt says it's been a while. He's been busy with his university exams. Okay, well, Pratt, since you're interested in trading, I'll tell you this. Make sure that you get your degree, and then you can look to take trading very seriously, right? You don't want to, let anything distract you from getting your degree. Get your degree. There is always going to be enough time to get involved with trading, okay? And this is what I would tell my own sons, my own children. Get your degree, get your education. Education is key. And then you can pursue trading. Okay? The more educated you are, the easier it is to understand the markets. The markets, it's not easy. It takes a very long time. It takes a lot of energy to get to the level of understanding that I have. And even then, it's still difficult, right? So it's always good to have a mentor. So you have a mentor. The mentor will help your learning curve to be very fast, right? Also, you don't really want to put too much, too much stuff into your head, because it could confuse you. Not everyone is able to process a large amount of information, right? Sometimes information can conflict with each other and cause confusion. So you want to make sure that you go with what your mentor teaches. And if you move from one mentor to another, you want to make sure that you try not to implement things from the last mentor with the current mentor. Just do what they teach, because they're teaching you what worked for them. Okay? My aim as a trader has been to create strategies that simplify trading. I've always wanted to simplify trading as much as possible, and create automatic trading systems. So this way you can just set it and forget it. And that's why I created my auto trader, which I do a live stream on every day, from Monday to Friday. I created this liquidity map, which lets us know where the liquidity is in the market. And these are my 2 best tools. I also did discover over 100 harmonic patterns in the market, but I prefer to use my EA and my liquidity map, because my liquidity map shows me more powerful zones than harmonics. Harmonics can form in many different areas on your chart, in many different degrees, and sometimes, it's just a small pattern, or it may be too big for the time frame that you're trading on, and so on. So it could create some degree of how can I say, confusion when you should be taking a scalp instead of you're taking a day trade, and so on. But with the liquidity map, you just simply move from zone to zone, which is beautiful. Nice and simple. One of the key factors in trading as well is keep it as simple as possible. Keep it simple. So far, we're moving sideways. Which is kind of a good sign. Hit that subscribe button, guys. Help out the YouTube channel. Hit that subscribe button. At the end of the live stream, anyone who is still with me at the end of the live stream, I will be giving you a vacation package. At the end of the live stream, I'll tell you how to get that vacation package. Okay? Okay, so Pratt says, can you give some ideas on retail psychology? For example, when retail gonna enter and exit? Okay, so that's why I created this liquidity map. Now, this liquidity map that you're looking at is only for the Dow Jones. I would have to create a new liquidity map for other instruments, right? So these zones that you're looking at, these are the areas where the market makers are looking to move price, right? So let me I'm trying to just look at this. Let's start around here. So this is 8:30. This is 10 o'clock. This is 9:30 in the middle here, right? Around this time, I don't trade manually, okay? Around this time, it's EA. My EA trades from 8:30 to 9, 9:30 to 10, and then I can take on manual trading from there on, right? So we don't trade manually inside here. Inside here, it's very aggressive at times. These days, it's very slow, but generally, it's very, very aggressive within these times, okay? So we start trading after 10 o'clock. So after 10 o'clock, we look to see where we are in the market. Are we at a D zone? Here is the D zone, right? We're at a D zone. So once we come to this D zone, we know that the market makers are going to look to push the price back down. And they're going to push the price down to an A zone, right? So all we had to try to figure out is what is the pattern that they're creating according to the Elliott wave theory. What is the pattern that they're creating? And they created this type of rising channel type wedge type formation here, right? And then when it broke down, see what happened. This happened on interest rate decision. I think this was the interest rate decision that happened here, right? So they broke down here. So I think I got short somewhere here, and I think I caught the move here and I exited somewhere here, right? So they broke down, and that's where you'd want to go short, when they break the trend line to the downside. So you go short and you're looking to get at the A zone. So if it comes down with a lot of volatility or momentum, and it doesn't give you any, like let's say a color change on the 1 minute or 5 minute chart at the A zone, it most likely will hit the B zone. Once it hits the B zone, you see a color change bar because you're coming down in red bars, and you may see a green bar at the B zone or A zone. That's where you want to exit. You want to exit at the A zone or the B zone once you get a color change bar. If it's going to be coming down with a lot of volatility, once it hits one of these zones, you want to exit right away, because it could just hit here, bounce, come all the way back up here, maybe come all the way back here, then go all the way back here. Then it could be very sporadic on these news events. So I would say once it hits your A zone or your B zone, just exit right away. Set your profit targets there. Once it hits, you're out. Okay? So look at this. It bounced from this B zone to this A zone, bounced from this A zone to this A zone down here, gave you another bounce, which is a correction. I would have been looking to sell off that correction to this B zone, bounced again at the B zone, gave another correction, broke the correction, sell off that correction to the C zone, and then it bounced here and just kind of slowed down, right? Came down, and the day started to come to an end because most likely this was around approaching 4 o'clock in the afternoon. So it's going to start to slow down. So it starts to slow down and you're out of your trade because you're not going to hold it. You can, but we don't like holding trades towards the end of the day. Okay, so I would say exit and wait till the next day at around 10 a.m. Eastern Standard, right? But you can see what happens. The price comes down, it gets to the D zone, and it stops, right? It breaks down from that D zone. It makes another one of these types of patterns like what I showed you here. See this? It did the same thing. It did the same thing here. Same exact thing. It doesn't do this too often, by the way, okay? This type of extension doesn't happen too often, but it happens from time to time. So it gave us another extension here, right? Then it broke out, pushed up, but you're not trading manually inside of this period of time, okay? So it broke up, hit an A zone, came down, hit an A zone, pushed up, hit an A zone, kind of cracked the A zone, hit that B zone, and then it pushed down again, hit an A zone, pushed up, made this bigger correction, pushed down, hit the B zone, continued pushing down, hit the C zone, made a little bit of a correction here, and it just continued pushing down, pushing down, pushing down. And you can see it came very close to the D zone, didn't quite get there before the end of the day. And over here, we hit the D zone, right? When we hit the D zone, what happened? It pushed back up to the A zone, right? From the A zone, what happened? Pushed down to the next A zone down. From here, pushed up to the next A zone, pushed down to the next A zone. It kind of hit the B zone here as well. So the day came to an end. This was, I believe, maybe Friday. And then look what happened. Trickle, 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 A zone. Hits the A zone, comes right back down, hits the A zone again to the downside, and hit the B zone here as well, right? So it came down with a decent amount of volatility. This was around the London Open. So volatility came in around that time. We don't always get volatility around the London Open on the Dow Jones, okay? So look what happened. We get this correction, and then price comes down to the next zone, which is going to be the C zone. It already hit the B zone, so you're not going to target the B zone again. Once it came down, hit the B zone, creates this correction. When it breaks down from that correction, we're going to target the next zone, which is the C zone. Came to the C zone, hit here, stopped, made a correction, break down. It was coming down, but then it never got to that D zone area, right? And price bounced. So this would be a bounce off the C zone for me, right? So this is a bounce off the C zone. So price could also stop at around the C zone and give us a bigger correction, which could be from the C. It can correct and go all the way to D before it comes back to the downside. And this will just be a bigger correction, right? Now, this could also be a smaller correction where price just kind of comes here, trickles off, and then dies back to the downside. And this was kind of like just a fake move to the upside. So that's why you need to use your trend lines to help you monitor what's happening. So if this price breaks down from this trend line, then I would start thinking that, hey, we may be going back to the downside. And if we come back to the downside, we're not coming back to this D because this D is no longer valid. I could remove this D, right? I could remove that D. It's no longer valid. Price would be coming down to a new level, right? A new A, B, C, D to the downside, because every time the A is hit, this liquidity map becomes reset. It resets. It starts over, right? So I'm going to be turning this into a lovely indicator, right? So over time, it will be turned into an indicator. So I'll provide you guys with it as an indicator so you can know exactly where the areas of interest is on your chart. And you can use, you could use whatever other methods you want to trade around it. You could use support and resistance. You can use Elliott wave theory. You can use whatever other methods that you guys prefer or use right now. You can use them, but use them at these levels, at these zones, right? I prefer to use the Elliott wave theory, the pattern formation aspect of it, the corrective patterns. So this type of movement, it tells me if it breaks down from the trend, price may want to come to the downside, continue moving down. Okay, you guys saw that I did have a trend line drawn here, right here on this move to the downside. And when price broke that trend line, it just pushed up. It just basically said that this wave down ended. It ended early. Price broke above this level here. So it's basically telling me that there is a possibility that this may not be 1, 2, 3, and then come back to the downside. Okay. It could still be that. And this wave could be long and extended before price comes back to the downside. So that is still a possibility. All right. So the areas of interest is going to be my liquidity map zones. And as I said, guys, over time, I will create this into an indicator and it will be made available to you guys. So Pratt, I hope I answered your questions. All right, the price is looking very, very choppy. We do have this trend line still coming to the downside over here. And we want to see price break above that, right? So if price comes and breaks out from that trend line, that would be a very nice sign that we could be getting to that D zone above, this D zone up here. Okay. Brad says, I'm not going to ask how did you get those zones. No, don't ask. Don't ask that question. It's strictly proprietary. It took me years upon years upon years of research and analysis to try to figure out what's going on and why the price moves the way it moves. I'm an Elliott Wave master. I'm a master of almost every strategy out there, and I see the manipulation that happens with these strategies. One of the only strategies that I never really paid much attention to was support and resistance, right? And support and resistance, it's a good strategy. It's good for scalping, right? Never really saw myself as much of a scalper, though I do a bit of scalping these days. But I come from more of a day trade background, and you need to understand the psychology, the way your mind works, right? My mind looks for big targets. That's just how it works. It's difficult for me to look for a small target. So my mind just looks for big targets. And that works against me in a lot of cases, right? Because not always, the market doesn't always move and make big moves. Sometimes it's just small little baby moves all day long, just correction, just consolidation, just accumulating buyers and sellers, right? So I like looking for big moves, and over the years, my liquidity map came about because it kind of helped me to start seeing where I can potentially set my targets. So instead of looking for a target that is more of a swing trade that's probably all the way up here or beyond that level, I know, okay, once it comes here, that's enough for the day. That's probably where it's going to end, right? For the day, because I'm a day trader, right? So as a day trader, you want to trade within the boundaries of what you can get during the course of the day. So I'm still watching and seeing how the price is moving, and I'm still expecting that this here is an accumulation, and possibly this is going to push to the upside. This could still be a move that's going to come back to the downside, because if you look, you see one, you see two, you see potentially this could be a third wave completing this corrective formation, and this is moving up so slow and dead. So this could be the wave that gets somewhere inside of B and then breaks down here and goes back to the downside. So at some point, I'm going to want to try to move my stops into break even. Just subscribe button. Help out the growth. Who else is with me today? Who else is with me? Let me know what kind of strategies you guys use. Let me know what kind of strategies you guys use. Let me know how long you guys have been trading. What's your experience? A lot of us have had a very hard beginning, difficult. It's not easy developing. Like to paper trade. I prefer to feel the burn. I risk real money. So this way it helps me to manage. You're not invested. So just do anything. Real capital, you feel the pain. So you know there is a saying, no pain, no gain. It's true. Remember guys, this is just me and how I trade. Everything I do here is for educational purposes only and entertainment. Button guys. I will remember anyone who stays with me until the end will be giving a vacation package. Stays with me until the live stream has ended. And we're moving up. This is moving. Gonna do here. We're still at that still bounce to the downside. So some profits here, right? Because I'm going to expect price to pull back. There is this trend line here, and there should be some sort of rejection of that trend. Just give you guys an opportunity to, I mean, my label is kind of blocking, but right? So this trend line, you see where it comes from? It comes from all the way here, right? There is a greater trend from coming down, and it's coming down, and it's coming down, and this is the last place where price made a new low, right? So this is the last place where it need to be placed. So as the price comes here, it's gonna have some sort of rejection at this level. If it doesn't reject through, right? So if it rejects here and it breaks down, that means that it's probably done making its move to the upside. It's probably going to start coming back. Okay. So at that point, I wait and decide if I'm going to sell off this break of this uptrend, move to the downside. I'm going to allow it to pull back. We could have jumped in right here, right? But I want to allow it to tell me what to do next. You see this wave that I told you guys about? According to the Elliott wave theory, yes, 1 second guys. 1 second. So according to the Elliott wave theory, okay, Brad says, is there some issue with your network? Giving me some sort of warning. I'm in the Caribbean right now, so the internet here sometimes it's not very stable. Like right now I'm getting another notification telling me that the bandwidth, right? It's okay, and it's not too much of an issue, okay? So I was telling you, so it says you get an impulse, you get a corrective wave, which is generally 3 waves. So this could be a 3-wave correction, and this move another. So this impulsive wave where it's cut short, and then the price continues moving to the price is moving to the upside. It's moving up, but it's moving up very choppy, like the price is overlapping each other. Lapping type of, which is kind of like this, it's telling you that it's corrective, which means that it may want to come back inside. It goes up. This one is doing it to the upside. Most likely it would go down, right? So we're just going to monitor and see if we're going to break down. So we break down, or if we go flat and then break down, if we go take that sell trade. If this is going to continue going up, it's going to stay inside the trend line. If it's going to back to the upside, so while it's coming down, I'm going to trend it. If it breaks trend, that move to the downside, and I'm going to use that trend line to help me gauge when I should come out of my sell and maybe revert back to a buy. I combine formations with trend lines and my liquidity. I find that it works great. It just to put them together. So it took me liquidity map together to get it as perfect as it is now, and then it took me to understand